Okay, so in this video I'm going to be showing you how to do the general journal. Now, when do you know when to use the general journal? You see, when the question states prepare the general journal, or you can even say prepare the journal entries, then you know to do the general journal. Now, so what's a general journal? Basically, any transaction which you make in a business or anything can go in general journal, right? It's a general journal. It's like your diary, okay? You can basically put any transactions in there. So let's start. So the first thing we want to do when recording this transaction is the date. 1st of September 2022. So on the first line we put the 1st of September 2022. Next, the line below we say what we're debiting. So if you look at the transaction, you borrowed a loan of 65,000. Now I wouldn't basically look at this now. You may need it in the future questions, but right now we're not in August, we're in September. Okay, so we're just going to do that transaction for September now. So you got a 65,000 rand loan. So what's increasing? It'll be your bank. Therefore you say debit bank. But when you're crediting, which will be crediting loan, put a space. Okay, because whatever you're crediting, you have to have a space. Then you put the amount, which is 65,000. You put that on the left and you put the one on the right which you're crediting. So next you do a story. So now the story, you'll get marked no matter what, as long as it makes sense. So just say you got a loan, or just say got a loan, no problem. Okay, and yeah, that's it. Okay, you got a loan. Now, once this is done, you skip a line, and basically that's how you record a general journal entry, okay? The next one, 1st of September 2022. Now, it's the same date as this, so we don't need to put a date, right? So we start, debit. What are we debiting? Okay, so the owner transferred her motor vehicle in the business worth 85,000. Now, as soon as you hear this type where the owner contributes something in the business, it's capital, right? But what is increasing here? It's a vehicles, right? Debit vehicles. And then obviously you're crediting capital, because when you credit capital, it's the owner's equity which increases. The amount is 85,000. So 85,000 debits, 85,000 credit. I also just want to stress, you have to put it like this: debit, credit, debit, credit. Also these, okay? So just give a space. Then you can say capital contribution. You can say by owner. Okay, so that's transaction is done. Now 6 September is a different date, so we have to rewrite it. 6 September 2022. Okay, debit. Okay, so what are we debiting over here? So business purchased 130 perfumes with a total cost of 13,000. So you bought perfumes, right? As a business you bought these things. So the debit is going to be inventory. Okay. And then your credit will be your bank. Because anytime you purchase something, it'll be bank. But let's see. Okay, so you purchased on account. So you cannot say this, right? You can't say this. I was wrong. So what you're supposed to say is this. You debit inventory, which is fine. Debit inventory is 100% fine. But because you bought on account means you bought on credit, okay? So it's we credit, your credit is control, which is your trade payables. Because remember, you owe that money, right? It's a liability, so your liability increases. So what's the total amount? 13,000. So don't forget, when you buy on account, you credit your trade payables, because that's your liability. Okay. Then you say bought on credit or account, same thing. Okay. Now the next one, let's see what's the date. 15th September, so it's a new date. So we go 15th September. Okay, so now debit, what you're debiting. So the business sold. Okay, so anytime you're selling a good, when you business sold good, remember there'll be two transactions, right? So remember how you sell a good, for example, 100 Rand and the cost price is 50 Rand. You'll say debit bank credit sales, then debit cost of sale credit trading stock. Similarly with this, right? So don't forget that when you're selling a good. So the business sold 100 perfumes bought from glassy suppliers for 300 each. So you sold it, so what's 300 times 100? That's 30,000, okay? So you sold these goods for 30,000. So record that transaction first. So it's debit. But you sold it on credit. So it's debit your trade receivables, your debtors control, right? Trade receivables is your debtors control. And then you credit your sales, okay? Because your sales is going to increase. Because remember, they bought on account. Otherwise, you would say debit bank. But they bought on account. So I said it's 30,000. Okay, so credit 30,000. Perfect. And then you say sold on credit. Okay. Now, I told you there's another transaction goes with this, because now you're recording the sale, but also you need to record the cost of sale, because that's an expense. So you say debit cost of sales, credit trading stock, so credit inventory. So debit cost of sales, credit trading stock, inventory. Now, what would be the price over here? Because think about it, they never give us over here what's the cost price, but before that they tell you it's from the same supplier, glassy suppliers. So they're selling you the cost over here. 130 perfumes, total cost 13,000. So take 13,000 divided by 130, that gives you 100 and that gives you 100 Rand. So 100 Rand is for one, but you bought, you sold 100, so that's 10,000. So your cost of sales will be 10,000. So debits credit 10,000. Then you say cost of goods sold. Okay. Now the next one, 29th September. Okay. So straight away on a new date, always put 29th September 2022. Okay. And now let's see. So Zane discovered that there was no stationery left, so you purchased additional stationery from suppliers. Straight away record that transaction first, right? So you bought stationery. So you obviously, anytime you bought, you credit bank, right? You bought it for cash, huh? Yeah, so it's credit bank. So first it's debit stationery. Now this stationery is an asset, okay? Don't forget that it's an asset. And then you credit your bank. Okay? And the amount is 6,500. So debit 6,500 and credit 6,500. Your story, bought stationery. Okay? So now, what's the next transaction? So after you bought this transaction, now at the end of the month, you said, okay, this 1,500 stationery has been used. So to record what has been used, first of all, you say debit your stationery. But this stationery is not your ordinary stationery, right? It's your stationery expense, okay? Because that's how much you used for the month. So you must record exactly what you used for the month, because that's your expense. But what you must credit is your stationery asset. Because here's the thing, right? And I want you to think about this. This is a stationery asset, okay? You bought stationery, okay? So imagine all the stationery in the cupboard. Now, when you use some stationery from the cupboard, isn't that cupboard will have less stationery? So that is why you're saying, okay, I use the stationery expense, okay? This is how much I pull out from the cupboard. But also credit my stationery asset, because credit what's in my cupboard, because I took that stationery in my cupboard out, so I have less stationery. So when you're crediting it, it'll go less, so it'll reflect how much of stationery on hand is in the cupboard. So you see what I'm saying? So yeah. What is this? 1,500. So debit 1,500. credit 1,500. Then you can say stationery on hand. Okay, right, so next one. So the next one, let's see the date, 29 September. No, 30th September. So record it, 30th September 2022. Right, debit. Let's see, right. So the telephone bill for the month for September, 4,750 has been received but not paid. So basically they're saying, okay, for this month you're supposed to pay this telephone bill, but you never pay it. So straight away it's a accrued expense. Accrued expense is an expense you're supposed to pay now, but you never. So the first thing you want to say is debit. You debit your telephone, right? Because you never record the telephone, okay, the expense. So you debit the expense, okay? And then you credit your accrued expense. Accrued expense is a liability, therefore when crediting it increases. And then the amount 4,750. Debit 4,750 and then credit 4,750, okay? Accrued expense, accrued expenses recorded. Remember, you can say anything, right? As long as it makes sense, you won't get marked down. Now 30th September, okay, so again 30th September, so you don't need to rewrite the date. So now in this one here, there's two transactions, right? So on 30th September, the business paid the following to the bank: interest owing and capital repayment. So interest and capital. Let's record the capital first. So if you pay, you know it's going to be credit bank, right? Automatically. So it'll be a debit. It'll be debit loan. Because what's a capital, what is called capital repayment? It basically means you paid part of the loan. So the loan is going down. Therefore, you're saying debit, right? Because debit alone, it goes down. Then you credit bank. Because if you took last month, example, 200 Rand from the bank you borrowed, you have to pay it back the next month in parts, okay? So therefore, when you're paying this 45,000, it's going to go down. Okay? Got a loan. Oh, no, loan repayment. Loan repayment. Now, this one is a calculation, but it's simple. So now how do you record the interest owing? They didn't give us any information here, but here's where this comes from. As of 31st August, the loan's balance was 70,000 Rand. Okay, see here. This is September, right? You got 65,000 additional loan. And before that month, this was the loan, 70,000. So basically saying, okay, last month you had 70,000 Rand alone. This month you got an additional loan of 65,000. So you got two loans. So add that together, if I'm not mistaken, you get 135,000. So basically your loan right now is 135,000. Okay. Now you want to record the interest for this month. So it's 135,000 times your 12%, because that's the interest rate, times 1/12. Why 1/12? Because it's only for 1 month. Okay, 1 month interest. Because general journal is only for 1 month. So what you're debiting? You're debiting your interest expense, okay? Because you need to record that as an expense. And then you're going to credit your bank, right? Because anytime you pay money, it's bank. So what I said, it was 1,350. So you work that out in the calculation, it'll give you 1,350, right? The interest. If you calculate it, you will get 1,350. Okay? And then the story over here, interest paid on loan. Now just a side note, right? Instead of saying, see how you got credit here and credit bank, they're commons. So you can put like in a separate transaction, or you can make this all in one transaction. You can say debit loan, debit interest expense, and you put credit bank, and the bank will be this amount plus this amount. So you can put it in one go. Or you can put it like this. Really doesn't matter, okay? Long as your accounting makes sense, no matter how you do it, it's going to work, okay? Okay, so thanks for watching. Don't forget to like and subscribe.